Bang, bang. What's going on, guys? Hope you guys are really excited about this interview. I really enjoyed it. I think you will as well. But before we get into that, make sure that you like this video so that more people on YouTube can find it. Make sure you're subscribed to the channel. And don't forget that BlockFi is the sponsor today. They've got 3 products. You can buy and sell crypto on their crypto exchange. You can deposit crypto and earn up to 8.6% APY in an interest-bearing account, or you can deposit crypto and take out a US dollar loan against your crypto collateral. You can use the description right here, or you can go to blockfi.com/pomp to learn more. All right, let's get into this episode. I hope you guys enjoy this one. All right, guys, what's up? Bang, bang. We're in a studio. We'll have more on that later. Today, I've got a special guest for you, my friend Mike, probably one of my best friends. We've got all kinds of crazy stories that we are not going to talk about on the podcast today. But we used to live together in San Francisco, along with a bunch of other people who we will not bring on the podcast because they're too outrageous. What's up, man?
How you doing?
I'm doing great. You were the first person in this room.
It's nice. You got a good setup here.
Yeah. Mike sat down and he looked around, and it was one of those looks of like, oh shit, this is real.
This is big time.
All right. Let's start. I actually have notes. I'm going to be really serious for like 2 episodes, and then I'll go back to being myself. Let's just talk about your background first. We met at Facebook, but before your Facebook, what did you do?
Before Facebook, I was a consultant. Spent time building financial systems for big Fortune 100 businesses, GE, TIAA-CREF, Summit Property Group. So right at the start of my career, just thrown into the deep end, building financial systems. First day on the job, they dropped a 300-page user manual on my desk. They said, Oracle Hyperion Strategic Finance, you got 2 weeks, go figure it out. So it was pretty intense, but I think for me, I felt really fortunate. I was just working with finance executives, learning the ropes, and building the financial systems. You get a chance to build their financial models. So you understand every single driver, all the different levers, how the business model works. And so being able to work across a bunch of different industries, seeing a bunch of different processes, helped me early on in my career build these mental maps of like, okay, this is how corporate finance is done. This is how, when you watch CNBC and you get the earnings and it's like, okay, here's our earnings projections, here's our guidance, here's how all this is done, here's all this is made. That accuracy becomes so important. So yeah, really fortunate to start off my career building those types of systems. Did a project with Facebook. A few weeks into it, project was going really well. The VP of Enterprise Engineering took me on the long walk in the middle of Facebook and started recruiting me. And I was at the time living in Chicago, had a condo, like life was kind of set, like was really kind of had good friends, and like my family was there. Gave me an offer to join Facebook, and he was like, exploding offer. You got 2 weeks. This was like right around Christmas. Ended up accepting the offer. New Year's Eve, moved out of my place. New Year's Day, I was in San Francisco. And I think we stumbled into each other like a couple weeks
Once
after
you go
that.
on the walk, they got you. Like for those that don't know, at Facebook, if you go on the walk, they have you, because there's a long walk to like how great this place is. Yeah. And then they're like, oh, by the way, here's an offer. You should take this. And then you take it. That's how they get you there.
Yeah.
All right. Before we get into Facebook, because I feel like that's like a very specific situation.
Yep.
These financial systems, I think most people don't understand like how intricate and complex they are.
Yep.
So you mentioned like projecting earnings,
Yep.
literally down to the cent, right, or to the dollar. And is it fair to say that like all this is just people are taking all the inputs, they're then saying, all right, we're going to run it through our historicals plus whatever we think are the new inputs. And then literally it gives us an output for this system. And that's how we're going to like literally manage the business. So on a day-to-day basis, we can tell, are we ahead or below the projections, where we believe we're going to be? And like really, that's like kind of what is the heartbeat of the business to some degree, right?
Absolutely. I mean, at the end of the day, it's all about, a business is about, taking in cash to generate more cash and driving those returns. And what's interesting, you mentioned kind of like the day-to-day, and I think the problem with current state financial systems is you don't have that day-to-day visibility. And I think people spend a lot of times building these financial plans. And the way that typically works is the finance team will work with board of directors, executive management team, and they'd say, okay, here's roughly what we think the business should look like. Very top-down exercise, planning very strategically around, okay, here's the initiatives that we want to do. Here's the market share that we want to take. Here's the growth profile that we think we need to have. And then that always kind of cascades down to the different department leads and the business leaders. And so then there's this really big exercise to say, okay, here's rough shape of what the business should look like, guidance. Then every single functional head in a business, VP of product, VP of engineering, sales, marketing, every single group kind of has their guidance and their targets. Then they go operationalize that and they say, okay, what projects do we want to do? Who do we need to hire? What pieces of software that we need to buy? And they substantiate those targets with what people describe as a bottoms up build. And so this is like bottoms up, everybody in the business, what are they actually going to do to execute on those plans, make sure that they can hit their goals, hit those targets. And so there's a lot of kind of just information that cascades down and then it needs to cascade up. And that's a long process. Like it takes a really long time to do those plans. I mean, people typically, start that process maybe Q3 where they start thinking about this stuff for the following year. And then almost all of Q4 sometimes for some of these businesses is consumed with this planning exercise. And then what my biggest insight was is being a part of that at so many different businesses, being part of it at Facebook, leading the finance team at Zenefits, building these financial plans is you spend all this time creating those plans and immediately as you say, okay, this plan is done, it's set, it just collects dust, and it just sits there. Then people actually go off and execute, like, okay, we've set our annual plan. Literally 2 or 3 weeks later, your marketer's like, actually, I'm going to double down on this project, punt on this project. Instead of a full-time hire, I'm going to hire a contractor, and they make all these different changes. And that is really tough to capture from a finance team who spent all this time building this model. It's just a model. And so that's kind of what brings us to Trace, where I've learned these insights, saw this problem. And I think finance, it needs to be more real time. It needs to have that day-to-day visibility. What are the actual decisions that people are making and how does that impact our financial results? And that's exactly what, so we founded Trace a few years ago to solve that problem where we help people make those day-to-day decisions. They can purchase, they can hire, they manage their projects. And then we help give them real-time visibility into, okay, how does that actually impact our plan? And the way that takes effect on our product is you get, a top-down target and then people can execute, and then you can make sure that you set that guidance. You told Wall Street like what you're going to do. Let's make sure that as we're executing, we have that day-to-day visibility into how we're gonna do what we're gonna do. The other way to do it, the old way, is like set our financial plan. Everything happens, we add everything up in the accounting system, and then we hope that it matches. And then we try to do like an analysis and understand that variance.
It almost feels like there's a complete disjointment between the finance team and then like the rest of the teams, right? And the rest of the teams, they're getting told by the finance team, hey, your budget is to hire 3 people and we need $10 million of revenue from you this year. And then the team's like, okay, cool. And then they go and they kind of do whatever they want. And they hope that they come back with the numbers. And, I'm overgeneralizing, but like to some degree, the finance team doesn't really know until they come back, whether it's on a weekly, monthly, or quarterly basis, what those financial performance numbers look like. And so it's almost like this infrequent, non-real-time understanding of the business, right? And that's where you get some of the quarterly projections and numbers and stuff like that. So it sounds like the solution here is just make it as dynamic as possible, shorten the feedback loops, and make it more real time, right? And that's essentially what you guys are ultimately trying to do.
Absolutely.
All right. So let's talk about Facebook. I'm going to tell a quick story to tell you how good of friends Mike and I are. Some of our old colleagues may listen to this and just laugh. I used to ping Mike on Facebook and Messenger, which the company uses. And I'd be like, hey, man, are you busy? And it'd be like noon. He'd be like, nah, I got like some free time this afternoon. I'm like, all right. And then we would put a meeting invite on our calendars and for 30, 45, maybe an hour. And then we'd go to the gym.
For the second time.
And we'd go to the gym and we'd work out. And it would just be like meeting with Mike. And literally we'd go to the gym and we would just talk about, we usually would actually talk about like business related stuff. But that was our like escape, is if we had a slow day, we'd go do it. So we're pretty good friends and we've been doing stuff together for a long time.
Yeah. We used to also wake up 4:30 a.m., take that first shuttle in, no traffic, get the first ones in the office.
People, I'd laugh, the whole Miami thing is like, man, in San Francisco, back in probably 2010, 12, 13, 14, like nobody cared about the tech industry. And then all of a sudden they had like Facebook and Google and LinkedIn and all these buses going through their city. And they were like, hey, who are these people? Like, not cool. And so I think that like that's the big thing that Miami's got to be careful of, is that like right now nobody cares about the tech people. But if you go and you do crazy stuff, then they're probably going to care a lot.
Yeah. I actually always give you credit for that, because when I was living in Chicago, I was a consultant, big Fortune 100 businesses, and I used to watch CNBC. I really cared about the markets and and then I moved to San Francisco, and, Facebook was a publicly traded company at the time, but started getting immersed in the world of startups, and I think being friends with you opened my eyes. You were already a successful entrepreneur. You sold a company in the past. And I think our relationship and our friendship is really what opened my eyes to like actually digging deep. And you can probably even remember back in the days, I was like working on all sorts of side projects. I was like, you introduced me to like the first engineer I've ever worked with. I was tinkering on all sorts of things. And it's amazing. You can, fast forward like, 5 years later, and it's actually took the plunge, left the job, went all in on starting something.
I used to enjoy on Friday nights, Mike and I, before we'd go out, we would get drunk and then we would argue over all kinds of dumb stuff. Like, hey man, what do you think about this company? Like, it's trash. He'd be like, I think it's going to be great. And you win some, you lose some. And so we always laugh about it. What was your biggest takeaway from working at Facebook? Like, what do you think was the thing that from working in, and maybe describe a little bit about like the role that you had inside the finance team, and like, what was the biggest learning?
That's a good question. I often think if I can go back to Facebook, what I would do differently sometimes. That's a question I always ask myself. And I would have like networked aggressively. And I think when you're inside of those businesses and you have a chance to work with so many smart people, so many dynamic people, knowing that I would have been an entrepreneur, I wish I would have just met as many people as possible instead of just going to the gym with you every single day. It's an amazing place to go spend time and just learn the ropes and really network, because I think you realize as you're building your companies, like being able to recruit great designers and great engineers, like all of that matters so much. But to your question, like what did I learn the most? I think what I learned was I wasn't a good fit for a big company, to be completely honest. I think when I was at Facebook, I was responsible for building financial systems, FP&A systems, kind of the top-down, more strategic models. We were building 5 and 10-year models to do, data center planning and like really long-term strategic planning. And I think what I felt I needed was like, I saw what those before me at Facebook had built. And I was like, I want to go build, and I think that was probably the biggest learning for me. I always tell people, I was at Facebook for 5 quarters, and people laugh. They're like, you're such a finance guy. You think about things in terms of quarters, and it was enough cycles for me to learn that like, actually, I want to go build, and so that's where I started looking earlier stage, not founding, but going to like Series C, Series D, where it's kind of like at that stage where you need to build a lot of that early infrastructure. So that was definitely my biggest learning.
All right, and then at Zenefits, I always joke that you are my one friend who went from I got a new job to I'm running the place basically on the finance side at Zenefits, and it happened in like a year, I think, or maybe a year and a half or whatever. What did you start at, and then how did you get to? Well, you're the VP of Finance, I think, right?
You get VP of Finance,
and kind of talk through just like the building process and like what systems you guys had to build and like what you learned there.
Yeah, I came in at IC level. I think at the time there was really not a team being built yet.
IC, for those that are listening, is individual contributor.
Individual contributor, yeah. And I think there was really no foundation. I think our kind of directive was build the finance infrastructure, and get this place ready to go public at some point. We need kind of to grow. I think at that point we were about 500 employees when I joined. By the end of that first year, we were 1,800 employees. So it was like insane growth. I joined just before we closed the big 500 million Series C financing. And so that was fun to be a part of. I didn't lead the financing, but I was able to participate, help build the models, help prepare the presentations. And I think, early on, I brought just discipline to how we built our models, how we presented, how things were organized. I think, David Sachs, who was CEO at the time, joked that like my formatting on the models probably increased our valuation by like $1 billion, just the cleanliness aspect of it. And that discipline extended into as we started to build. So like I said, I was so fortunate in my early days, the first few years of my career, to work with those big Fortune 100 businesses, understand organizationally how were they set up, what are their processes, what technologies do they use, and so that I learned the playbook. And I think when I joined Zenefits, I quickly implemented that playbook to say, here's what the modeling environment should look like. Here's what our team structure should look like. Here's the portfolio of services that we need to provide to our business partner. Here's kind of how all this should orchestrate. And I think once you kind of lay down that foundation, it really establishes yourself as a leader on the team. And so I think that got me a promotion to director. There was a lot of change happening at Zenefits. Zenefits grew way too fast. We ran into some compliance issues, and then we had some tough decisions to make. And I think one thing that you know about me is, I think always okay to speak my mind, and I think when times get tough, I think having somebody who is willing to make tough decisions that are the right decisions for the business becomes really important, and I think that kind of what earned me my seat to kind of take over more of the finance function and to participate in board meetings and to help drive some of those decisions around restructuring, which are really tough things to do. But at that point, I mean, it saved the business for sure.
Yeah. It feels like that's one of the stories of Silicon Valley of like, you get all of the experiences wrapped up in 12 to 18 months, right? Like, hey, it's a rocket ship. Hey, things are now kind of unsteady. We've got the compliance or kind of regulatory issues. We've got change of leadership, like all these different things that we got to restructure the business. Like you really get a lot of experience very, very quickly, which if you're going there to learn is like actually the ideal kind of, path that the company goes through.
Yep.
What was the biggest thing you took away? Like when it's all said and done, you walk away, right? You go start a business, but like when you think back, like what's the thing you learned?
I think it's business fundamentals matter, and it's it's really
shocking, alert, 2021 breaking news.
Yeah, and it's crazy, right? Because you look at some business where the unit economics are upside down, and investors are still piling cash into these businesses. And the playbook has worked in some instances where it's like, even though the unit economics are upside down, and unit economics being looking at for what's the unit of value that delivers future value for this business. And so a lot of software businesses, it's like a license or a seat or a user, or for Uber, it might be a rider or something along those lines. And so for every dollar that we earn from, that unit, are we able to get $3 in the future? And a lot of times these businesses are like, actually, we're going to pay $1 right now to get 80 cents in the future because we're going to go win market share and expect that dollar will be worth $3.
Yeah, we'll build future products or whatever.
Exactly.
And that 80 cents will then grow to 120, 150, $3.
Yeah. And you have to be really, really careful about where you apply those principles. And I think, Zenefits at one point had really strong unit economics in certain areas in terms of its ability to. So Zenefits provided free HR software and then monetized as an insurance broker. Really disruptive model. I think everybody needs HR software. As soon as you start a business, you need HR software. And to get that software for free, and then also have just somebody be your insurance broker, and and you can provide that free software in exchange, and that broker commission that you're able to get, it's really valuable.
I gotta admit something real quick. I wanted to test it out one time, so I went in and I put like name, whatever. I don't know. I got like 3 clicks in the funnel and I was like, I don't got time for this. Like, I'll come back and check it out. Alex from Zenefits is still emailing me. Like, I don't know who Alex from Zenefits is. I don't even know if he's a real person, but still emailing me. I've unsubscribed, I've blocked, etc. But I'm still getting emails. So Zenefits definitely knew what they were doing.
That's awesome.
They were relentless.
Keep up that relentlessness. Yeah, exactly what I was going to
say. When you decided to leave, did you know you wanted to go start a company?
I did. Yeah. Right. And so when I decided to leave, it was on the plan to go start a company up.
All right. Why Trace? And what the hell do you guys do? I think people see it and they're like, wow, these guys have like great investors and like they're smart, but like, what is finance systems?
Yeah. Well, Trace is the first service desk for finance teams.
All right. What does that mean?
We help people in a business purchase, hire, and manage their projects. Those are really the fundamental building blocks of any operating plan. It's what people do to deploy and invest their resources and their capital. And most software businesses, 60 to 70% of their spend is on hiring and headcount. And then they purchase things like software. You have professional services and contractors. Trace facilitates all of that work, and so it gives people a mechanism to go get those things done. And then it gives the finance team visibility into what these people are doing. And so the old world of this process is like, you collect a request and you like stamp it for approved, and like those people go get those things done. What we do is we collect this great information. We automatically give finance teams forecasts. So going back to that, example that we said, we need to give people real-time visibility into how they're business is going to perform into the future, we give that to people automatically. And so this is kind of like a paradigm shift. I think people always think about these old traditional financial models. We're kind of flipping that on its head and saying, you need to collaborate with your business to collect these requests. Let's maximize the use of these requests and understand what's committed. What is my committed spend? What's my committed forecast? What's pending approval? What's been approved? And how does that impact my business? And that's powerful information set that like a finance teams to accurately, manage the business. One of my friends, he's a head of finance at one of the top SaaS companies. He says it best, and he's a big fan of basketball. He's like, the current finance tool set is like a coach, coaching a game and not being able to make any adjustments until the game is over. He's like, coaches have to be able to make adjustments in real time. And the way to do that is to collaborate with the business, understand the decisions that they're making, understanding how those decisions will impact the broader financial system, financial plan, and then make adjustments and tweak. And that's what Trace allows people to do.
All right, before we keep going, how do people go buy the software? Because if you run a business of what size, what's the ideal customer size?
I think once you have around 100 or 150 employees, you typically start to have just enough distribution, enough people across the business where it starts to make sense. You have a finance team in place. We're still trying to figure out what the upper bound is. We just closed our first enterprise deal.
Nice. Sales.
Yeah, it was a 1,500 person business. They're going to be 2,000 employees by the end of the year. And so our goal approach is like, let's focus on growth stage businesses now before they have all of this infrastructure.
So like 100 to 1,500?
100 to 1,500 is a good kind of...
All right, tracehq.com.
Tracehq.com.
By the way, for those that don't know, if you talk to the sales team, Mike's brother, Matt, he runs a sales team, right?
Runs a sales team, yeah.
All right. He's an absolute animal. He will explain to you why you're an idiot if you haven't been using the software.
Absolutely.
What's it like starting a company with your brother?
It's amazing. It's amazing and it's hard at the same time. I can't lie and say it's been perfect at every single step of the road. I think the CEO VP of sales was always an interesting relationship, as is. And then me and Matt. We are.
I've got 4 brothers. You've got 1, and we're all very similar.
All very similar. Yeah, him and I are like so competitive, but at the same time we have the same goal. We want the same things. It's honestly been one of the most rewarding things in my life. Me and Matt. We have a really special relationship, as you know. He's my brother, he's my best friend, but I love him like a father, and I want him to do well. I always want him to succeed. And so I think him and I being able to work towards the same thing, it's incredible. When I'm working weekends, working nights, I jump into Slack. It's like, whose little bubble do I see there? It's like, it's Matt's, It's like the guy he's just getting after it, There's been tensions, there's been hard times, and I think there's like little brother, big brother things that happen, and we always manage through those things. And
but isn't it fair to say that actually you would have tension with like any executive team, right? Just naturally as you build a business, and it's easier to resolve with your brother because you can just be honest?
We can be honest, yeah. But I think when there's other executives, there's a level of professionalism for sure, And like him and I, we keep it professional like all the time. But I think we also let things come out as well, and have a little bit more heated and heartfelt debates,
Yeah.
And I think it's a superpower, because when you have that trust with somebody and that at the end of the day, nothing else matters. You can make $0. Like they just want you to be successful. And that's the root of the relationship. And it's like that family bond. You can get through anything,
But you can and the only reason I know this is because I do it with my brothers. Yeah, you're a professional, whatever. And then there's one moment you're just like, dude, I will whoop your ass. Right? And the younger brother say the older brother say the younger brother, whatever. But that eventually comes out. Yeah. And then everyone's like, all right, chill. And you want to go get some food? Right? And then it's perfectly fine. And you pretend like it never happened. And it's weird to other people, right? Yeah. But I think to people who have brothers specifically, right? It's just that's a natural thing.
Yeah.
And so it's unique. And as I've worked more with my brothers, you realize you're exactly what you're saying. Yeah, I want them to be successful, but hey man, don't forget, you're the little brother. Yeah. So all my little brothers and Matt,
Yeah. And Matt's like, yeah, I'm the little brother, but I'm the bigger brother.
Yeah, don't worry. My youngest brother's taller than me and he reminds me all the time. All right. So with Trace, the whole idea here, I mean, it's like a no-brainer high level idea of just like, hey, we should make this more real time. We should have more like almost like streaming information, right?
Yep.
If we have people who are making decisions and forecasts and they don't have information, then they can't be effective with it. If we can then build software to get them the information faster and in more real time, they should be more effective, more efficient, all that kind of stuff.
Absolutely.
Okay, great. Makes sense. How do you build the product? Because part of this, I think, is like most people are, especially those that haven't built SaaS software, or I guess, software as a service, they're just not used to building for these big enterprises, right? They're used to thinking about like, oh, let's build a mobile app, or let's build a website, something that it's more consumer facing. What changes in the product development cycle for you as you guys look to service, really big customers that could pay you a lot of money, but also there could be 5 different types of customers within one single, customer base, right?
Right. Yeah, it is tough. It's a balance. I think you need to start with like your insights or the problem that you want to solve. And I think we were very clear around kind of like, the insights and the trends that we wanted to tackle with initially thinking through the scope of what we wanted to build. I knew that I wanted to do something in the finance space and solve these specific problems around just collaborating with the business and collecting this information and just automating all these routine FP&A tasks. So I've been there, I've done it, I've been in the seat. And so I think we kind of know, where we can provide value and really where we can differentiate from other players in the market. And then it's just like, tactically, okay, let's, now we have like a big vision, and we think there's a huge category to be defined here and to be captured here. How do we tactically go do that with like, a few $1,000,000 of a seed round and like, a handful of engineers? And that's where it gets a little bit more difficult to say, okay, where do we start? What's our entry point with customers? And, how do we navigate from there to then continue to unlock and build towards the vision? And so that is a process of just talking with customers, understanding their needs, defining requirements. And when you're building for the enterprise, there's not a lot of shortcuts that you can take, especially when you're dealing with financial software. The security of that information, the security of that data, working with the legacy like accounting systems that you have to integrate with to get data, all of those are kind of just table stakes. You have to do that. You have to do that really well. And increasingly with things like security, you have to be like SOC 2 compliant, and you need to make sure that you're protecting people's data. And so that's core infrastructure that we built in from the early days. So compared to like building a consumer company where you're just throwing ideas out there and you're just trying to find a lightning strike, when you're building an enterprise company, you have to be really thoughtful about how you architect the system, and how you sequence things to deliver value to customers. I'm really fortunate to be working with an incredible co-founder and CTO. His name is Martin Destagnol. He sold his last company to Box, led product and engineering teams there for 4 years. Serial entrepreneur, so I think he just understands how to build. But coming from Box, he understands, the importance of synchronization, and, Box makes sure all your files are synchronized across.
There's somebody coughing in the room. This is not allowed. When we're in person, there's no coughing allowed. All right, keep going. Sorry. Leave that in. Don't edit that out.
Yeah. So Box, he makes sure that everything was synchronized, and it's the same thing when you're dealing with financial data across systems. You need to make sure everything is synced. And then you also need to make sure that those documents are secure, and Box handles, government documents for government agencies. And so that security aspect really came into play as well. And so we were really able to think about, things like, users and permissions, what users have access to what piece of the different product, what can they see, what can they not see into the foundation early. And that's really going to be helpful as we continue to scale and service these bigger customers, because we built the infrastructure anticipating, okay, we want to go serve big enterprises, down the road. And so that's good that we have that infrastructure.
When you think about what this will empower, right? So the software, we're just going to say it works. We know that the customers are using it. How does it change a business, right? Like what is the outcome once they use it in terms of somebody buys into the vision, they say, yes, I want the real-time information. Does it lead to more revenue? Does it lead to just better forecasting? Does it cut costs? Like, how do you think about the impact on an actual business?
That's a great question. I'm going to start.
Mike, all I do is ask great questions.
Yeah, that's fair. I'm excited for the questions at the end. Talk about aliens and stuff. So I think I'm going to start with like a few different areas of where we deliver value and where we're going to create change. So first is just from like a cultural perspective. And I think like Trace, it empowers people. It empowers people across the business to hire who they need to hire, purchase what they need to hire, to manage their projects. And I think finance is kind of shifting away from this old guard of like gatekeepers and people who just say no, and they're realizing the real way to lead and the real way to get results is by empowering people and holding them accountable and allowing them just to execute and move with speed. And I think that's kind of the first shift that finance will create in a business. It allows finance to be a collaborative partner to the rest of the business and an enabler of the rest of the business to allow people to move with speed. The downstream impacts of that is now we're giving all of our business partners a way to collaborate with us, to give us information, to get us in their minds of like, what are you thinking about doing? And all that information can then go be used to just supercharge existing financial systems and finance teams. And so it starts with giving that real-time forecast to finance, which is like an insight that finance teams really haven't had before. They're really in the dark without getting this information. Or if they want to go try to create this in the old world, it takes weeks, and at that point it's already too late.
I mean, this sounds ridiculous, and I can say this, you can't, but like it's basically dinosaur type approach to doing this, right? Where it's like very static. It's kind of top down, centrally planned type environment to what you're talking about is basically where the world's going.
Absolutely.
Right? It's just real-time information that now I say, okay, we thought X was going to happen, X didn't happen, Y happened. If we take that input and we change it, rather than wait till the end of the quarter to make any change, we should probably change it on day 3 of the quarter so that the rest of the quarter isn't screwed up because one of the inputs we made into the model is wrong.
Absolutely.
That's like a no-brainer. Like actually coming from somebody not from the finance department of these big organizations, you're like, well, you guys haven't been doing that, right? Like it's kind of crazy to think about just how hard it must be to do this job without real-time information.
Right. Absolutely.
Right? One of the pieces of the software that's really fascinating to me, and I should have said this in the beginning, I'm an investor. Mike was nice.
Thank you.
He's going to try to make us all rich. So he'll be much more richer than I am, but that's fine. Is collaboration in terms of you guys start out collaboration pre-pandemic. So everyone's in the same office for the most part, right? And we're going to use this software to help everyone kind of work together better.
Yep.
Pandemic happens, people literally scatter all over the world. And so like collaboration software is more important than ever. Talk a little bit about just like what this does to the internal communications of teams as they start to use the software.
Yeah, I think, well, the first thing is, kind of when the pandemic hit, every single finance team was put on tilt, and then they were saying, okay, like what if we have to cut expenses by 20%, 25%? What do we need to do? And so using a tool like Trace to have the visibility into what's committed, what's not committed, when are our renewals, when can we get out of this contract, when does this contract end? Those are some of the questions that we allow people to answer so they can just sleep easy, at night, knowing that they have all this information and they don't have to go dig through Google Drive or Box folders, analyzing specific contracts, trying to enter information out. So we could have helped people really get started. And then from there, executing on new financial plans. At that time, as people were kind of just trying to figure out the new world, they were just like, okay, iterating, scenario 1, scenario 2, scenario 3. And then when you pick a scenario, you need to go, execute that scenario. You need to, socialize that and then collaborate with people. And collaborating on financial decisions and information is really, really difficult thing to do. I mean, I think there's just like a ton of, information. There's a ton of documents that needs to be, you need to have like both tools that allow you to collect this information, to collect these documents, but chatting then in Slack without the context of this information is really difficult, a really difficult thing to do, and even if it's just like, for an example, if I want to talk about a number in my financials, I might say it's at the intersection of this department, this account, this location, and this date, just so we can make sure that we're talking about that same piece of data or information. And so Trace allows people to, have productivity tools to get their jobs done, but then also collaborate with that information right there, So if I want to ping somebody and say, hey, we got this renewal coming up, like, should we renegotiate? Should we go look for new vendors? Do we want to cancel this? All that can happen in the product, and having that collaboration in context is really, really helpful, especially when you can't just go, knock on somebody's desk and be like, hey, I need your help. We want to make this change. Like, is it good to go? And so I think it's increasingly important to have good productivity tools with collaboration deeply ingrained into the experience while we're working remote.
It almost feels like right now you guys are taking the data. You're saying, hey, we're going to help you do more with this data in terms of real time and streaming and all that. Yep. Then two, it's like, hey, we're going to help you communicate and collaborate around the data. And then eventually, if you can basically kind of almost like sink your hooks into an organization, right, to some degree of, okay, now we've got the data and we've got you collaborating here, you can build out all kinds of products in a product suite that just continue to solve problems for these finance teams. And in some way, it feels like maybe there's been more software built for the consumer, like finance, yep. right? Whether it's taxes or P&Ls and stuff like that, than it is for these like kind of growth stage, technology companies. And if you can really just essentially establish that entire category and be the product leader there, then it's a no-brainer, right?
Yeah, absolutely.
That's why I invested. So
yeah, we think there is a new category here. I think there's like categories of financial planning systems. There's categories of accounting systems, and we think that there's this new category that's based around collaboration and workflows and analytics. And
does it have a name? Do you guys have a name for it?
We call the category finance service management. And service is a very key part of that category name because we think about the portfolio of services that finance needs to offer the business. The problem with the incumbent systems like the planning systems or the accounting systems is they're really built for finance. They're not built for the people in the business to collaborate with those tools and to use those tools.
So the current tools are built specifically for finance teams to do finance activities
Power
better.
User tools for finance.
Yep.
Exactly.
And what you guys are saying is, no, we need to give tools to the finance teams that help them work better with the product team or with the customer service team or whatever else. And so it's providing connectivity between the finance team and the rest of the organization.
Absolutely.
Man,
we say the
convince myself this is even better business than I thought. Damn, all right.
Yeah. We don't actually compare our category to existing financial categories. We say it's most analogous to IT service management. So IT service management and finance service management. IT service management is companies like ServiceNow and Atlassian, and they built incredibly valuable businesses around a really simple concept of a ticket. You need anything from IT, you go create that ticket. It was kind of like the core of what those systems started as, and that doesn't really exist in finance. And interestingly, a lot of people use Atlassian's Jira product for some of these workflows. Where it's like, I need a workflow ticketing system for purchase requests or hiring requests, and so they end up using generic workflows, but they're not built for it. You're not built to understand your financial data, to do all of the connections with your financial systems and give you all the outputs that Tracy's going to be doing. But so from an analogy perspective, we're most similar to those businesses. And I mean, ServiceNow is a $100 billion business, Atlassian $50 billion business, 2 of the top 10 enterprise cloud software companies. So we think there's huge category upside to finance service management.
All right. So you've raised a good amount of money for early stage technology company. Walk through what that experience has been like and kind of what are some of the tips and tricks that you picked up as you went through the fundraising process. So if there's a founder out there who's like, hey, I'm about to go raise capital, like what are the things that you found that worked for you?
I think it's a great question.
I told you only great questions.
I think people say that's a great question when they're trying to like buy themselves some time.
I know. I'm not going to call anybody on it. I've called people out on it before, but go ahead.
Yeah. We were fortunate to have a great early investor, Jeff Clavier at Encore Capital. He's the OG of seed investing. He's been doing it for a really long time. It wasn't easy for us, to get started on the kind of the fundraising trail. And so first piece of advice is, I think people give this advice all the time, is test your pitch with friends and people who you can really trust and dial that pitch in before you go kind of talk to your ideal, investors.
So it's basically start with the people who not necessarily you don't want, but start with people who either aren't actually investors but can give you feedback. They may be people in the industry or people that you trust and know, and then almost move in and go pitch the people who like they're nice to haves first, and then work your way up to the people that actually you want.
I think that's a good idea. I think you'll have a good feeling when that pitch is kind of dialed in and your story is really dialed in, and it takes some time to kind of iterate on that. I think we met Jeff at a good time. I think he was a believer in the category, believer in the potential, and really a believer in the team. And so we initially raised a $3 million kind of seed financing, and that allowed us to go build our early team, develop these kind of proof points. We brought in some institutional investors into that round. And so we brought in Redpoint, Greylock, and Nika, all in about equal amounts. And they're typically a little bit later stage investors. And so I think there's always a question that an entrepreneur needs to ask themselves. It's, if you're going to bring in a later stage investor, that brings signaling risk at the early stages. So if they invest early on, they decide not to do subsequent financing, that can be bad signal to other investors in the market. At the same time, you get their brand, you get their power behind you early on. And so we made the decision that instead of bringing in like two big institutional seeds, Uncourt Capital is just primarily a seed investor, and Jeff will say his job is to go, help us get that Series A done. He's not going to lead the Series A. We made the decision to bring on those, bigger investors. And for us, it worked out to be a great decision. We are fortunate to be working with Sarah Guo at Greylock. She's been an incredible partner from the very beginning.
Why?
I think she deeply understands our market and what we aspire to do. I think she's a true believer in the category and the potential, and she's done the work to speak with CFOs in our network. They introduce us to customers that we can go chat with. Even early on, before we were at the stage of our product being ready to sell, she would sit in on the demos and actually do the work. It's rare to have a partner that's gonna of course, open up the Rolodex, introduce you to folks, but then actually go and sit in the meeting and see how it goes and get that feedback, So even in the early days when we're still developing our product, you can see how, finance people respond to it, kind of like you respond. It's like, yes, we need this. It's like, why has this not been done before? And you can develop that conviction over time. And so then when we see opportunities to raise more money, move faster, we want to increase and accelerate on the product roadmap. We've had supportive investors, and Greylock has continued to invest in us, which has been fast. It's been allowed us to hire our first founding lead designer. We're currently hiring for engineers. So if you're an engineer looking for a job, come talk to Trace or go to Pomp's crypto jobs, depending on what type of sector industry you want to work in.
Wait, hold on. All right, so if you're an engineer, you should go talk to Trace. I'm super impressed by Sarah going to the actual meetings.
Yes, that's incredible. Yeah, she's a great partner. She's when her and I meet, I say I enjoy the meetings because I always learn something. Mm-hmm. And that's of course, you love to chat with people that you always get to learn mm-hmm. stuff from, and you can actually have a good sparring partner when they understand and they've done the homework. So I think it's pretty rare to have found that.
Any other investors or advisors that have stuck out in terms of either over delivering or you're hey, look, they're super valuable, that doing something that people normally wouldn't do?
Yeah, a couple of people come to mind. I mean, you're the one of the
first. No, you can't. Come on.
You're one of the first person that come to mind, because I think we were fortunate to have you, and I think you came in. It's not you write big checks for big companies. You do big deals and big rounds.
Yeah, big deals. Man, I'm gonna cut that. That's gonna go somewhere. I don't know where we're gonna put that, but that was a great fucking clip.
But the beauty of it is you have a small check in Trace, but every single time, and obviously we're friends, so it's a little bit different. But every single time I call you, it's I have somebody that I can get feedback from. Yep. Good feedback. So I've always appreciated that. Somebody else who comes to mind, a couple people come to mind. Charlie Keevers, he's the CFO at Carta. He's an investor in us. And it was in our early deal. We didn't have a lot of allocation to share, so it's not a big check, but always supportive. I mean, whenever we want to meet, he gives us his time. Whenever we have resources, he shares resources. He's always willing to make introductions. And there's a handful of people like that are just the true believers. And yeah, so fortunate for all of them. I can go on and on with
what's fascinating to me is just the common thread through a lot of that. I think it's time, right? And if you think about it from all these kind of solo capitalists or people who are writing angel checks, etc., we've got a couple of companies that I've put pretty big checks into, and then there's 20 checks that are literally $1,000, $2,500, $5,000, whatever. Yeah. And now founders are starting to use Angels has a new product where basically you can kind of pool a bunch of really small checks. It's one line item on your cap table. So maybe you want people with big audience or people who are an expert in a specific space or whatever. And what's fascinating to me is if you go talk to the founders, they're oh, those people are way more helpful. Right? Maybe I've got one big investor who's really helpful or has opened up the Rolodex, kind of like what Sarah, it sounds like, has done for you and Jeff as well.
Yep.
But then there's this person who's actually really, really valuable to me, doesn't even have that big of an economic stake, but like they're always there. I know I can call them, whatever. And to me, I think that's the argument for like why people should do more angel investing, right? Is because you forget that that person's actually getting value out of it as well, right? Like there's probably very few people who wrote a small check who are like, oh, this can be life-changing. It's more so they're either learning, they enjoy it, they want to help people. Like there's some other non-economic benefit to them for doing it. And so it's fascinating to hear that like the time investment, the access is almost more important than the money, right?
Yeah, absolutely. I think there's a rise of the operator investor right now. And I think increasingly we're seeing a lot of great operators who are, C-level, VP level, starting to write checks. And I think entrepreneurs are learning that those are some of the best people to have on your cap table. In our most recent financing, we brought in a syndicate from Fog Ventures. It's Operators Guild is the network. And it's like 500, operators who are VP, COO, CFO type folks. And we were able to bring together a great syndicate of, I think we have like 40 different, VP, CFO level folks. I think it's early in terms of like our relationship with them, but we're already getting so much from them and so much from that network. I think increasingly entrepreneurs are going to want those types of folks on their cap tables who can really, really help.
For sure. All right. Before I let you go, I want to talk about investing in general. Have you done anything in crypto?
I own crypto. I own Bitcoin.
All right.
Well, I mean, okay, let's go back. Let's go back to times at Facebook. I think it was like 2014. I know this, you weren't like huge into crypto at the time, but we were talking about it. We were on the shuttle, there's probably like a Giants game. So we're like sitting, waiting, 45 minutes, just sitting on the shuttle trying to pass time. And we were talking about buying crypto and buying Bitcoin. And I started doing my homework, and then one day I'm like, okay, I'm gonna buy some just tiny allocation. So we're on the shuttle. I got my Wi-Fi going. I like go to Coinbase and I'm like filling it out. And then they asked me for my license and I'm just like, all right, that's where things stop,
Nah, you don't need that.
I'm not putting my license on this website. Yeah. And so looking back, that was a little bit of a bummer. Wish I would have done that. But I think I've gotten it. Honestly, I think your conviction in it and your conviction along the way is like done. I've done my research and like I've come to believe that like this should be an allocation in anybody's portfolio. And I'm not I'm more of a
you're not a 95% guy.
I stick to my finance principles. But at the same time, it's like let your winners ride. And when you were debating with Jason Calcanis about this, it's like, well,
Jason Calcanis got a fiat haircut. I love Jason to death, but he's got a fiat haircut. Just so we're all clear, for anyone who's been watching this podcast or watching Andrew Schultz podcast, Jason is the one who started the fiat haircut whole situation. I love you, Jason. You didn't see me in Miami, so you're going to get that right there on the chin, but I still love you. That's the whole thing. Go ahead.
Yeah, I mean, let your winners ride, and I think that's something that he believes. And so if Uber ends up becoming 95% of your portfolio, I mean, like you gotta let your winners ride.
What else are you invested in? Like not dollar amounts, but just like from a percentage basis, just ballpark. Is it mostly equities? Is it like others? Like how do you think about in today's world creating a portfolio? Like how do you think through that?
I think it depends on your time horizon. It depends on your risk profile. I'm, a big believer in the enterprise software asset class. And I think, of course, I'm building Trace. And so a lot of my eggs are in the Trace basket. But I really believe in just the opportunity in just cloud software. And I think what we've seen is like in that asset class, I mean, we can talk about, Bitcoin now being $1 trillion. The enterprise cloud or cloud, asset class is a $2 trillion asset class. And the top 5 companies in that top 5 are $1 trillion. So you can compare those top 5 to Bitcoin and see like, how do those two things stack up? I would say that it makes sense for people to have good exposure to the cloud category. And when you look at the cloud, it was, roughly 600 billion a couple of years ago, and now it's 2 trillion. It's coming back a little bit as interest rates are going up and multiples contract a bit. But I think there's still just so much upside. And I think you're seeing that in the markets, and I think you're seeing some of these public guys come downstream and get deeper and deeper, and go more and more upstream. And that capital is kind of continuing to flood up into startups. And I think there's just a huge opportunity. And those numbers I just gave were for publicly traded companies. When you look at private unicorns, companies valued over $1 billion, that represents, there's like over 500 unicorns, and that represents another 2 trillion in value as well. So just
those 4 trillion total,
really big numbers. Yeah. And those are for unicorns. So there's even more at the earlier stages. And we talk about asymmetric bets and how Bitcoin was, one of, if not the greatest asymmetric bet, of all time. I think you're still seeing that in early stage businesses in the cloud software category.
I mean, I talk about it all the time, right? Like, from a professional standpoint, a little bit different personally, but professionally, when I think about allocating capital, if you invested in Coinbase's seed round or Series A or bought Bitcoin on the same day, Coinbase's equity actually outperformed Bitcoin, right?
Yep.
Now, maybe at some point in the future that doesn't end up being true forever or whatever, but like up until now, that's true.
Yep.
There's a lot of businesses that are very similar to that, right? BlockFi, Gemini, Kraken, like all these different companies.
Yep.
And so I think that it's less about like equity versus like crypto assets, right? Or these like liquid tokens.
Yep.
And it's more so about like sector bets, right? And if you think about it, probably the 2 best sectors in the world to have bet on over the last 5 years, it's like cloud software and crypto.
Yeah.
Right. And maybe there's 1 or 2 others you could throw in there, but like those are basically the future, right? In terms of the way that people are going to get software delivered, they're going to pay for it, et cetera, and all the cloud stuff.
Yep.
And then 2 is like this whole reworking of a financial system.
Yeah.
Like outside of those 2 things, you'd be hard pressed to find 2 other sectors that you'd want to go bet so heavily on.
Yeah,
So I think it's more, it's less about like they're competitive, and it's more so just like, I don't know, there'd be like 5 sectors that, in hindsight, people look at and be like, oh, if you were along those sectors, you could have been an idiot and make money.
Absolutely.
Right. And like cloud software is definitely one of the 5.
Absolutely. Yeah. Just go long technology.
I mean, we could talk about Warren Buffett and Charlie Munger's recent comments, because I think both you and I respect them very deeply, like
Absolutely.
from just this historic run. But like, they don't understand technology at all.
Right.
Right. And like, it's pretty crazy to hear the like flippant conversations and the responses to like all these questions. And to me, it's like very weird because I think we know that like athletes are a great example, right? Athletes like go through this process of they get better, they improve, they get better. At some point they peak.
Yep.
If they're a professional athlete, hopefully it's when they're a professional, and then there's kind of this like decline. And if you're really, really good, like maybe a Tom Brady, who, he's 0-2 in the Super Bowl against Eli Manning, he's been able to stay around for a really long time. He plays into his 40s, right? And like that peaking, where did he peak? Did he already peak? Is he got the future to peak? Like nobody knows, but eventually like he'll decline, he'll have to retire.
Yep.
In business, you obviously have a lot more longevity,
Yep.
right? But like at some point, like, yeah, there is a decline.
Yep.
And so is it 60s, 70s, 80s? Like by 90, you've probably, on the way down, which again, doesn't take away. Like if you were so much better than everybody else, like you could have declined 50% in your skills and evaluations, abilities, et cetera, and still be better than everybody.
Right.
Right. But it just feels like there's an entire generation of people who like completely miss cloud. They completely miss crypto.
Yep.
And I still think through, is it an age and like a demographic thing? Is it a just experience thing? Like if you don't grow up with a super phone in your hand, do you actually end up just not understanding the importance of cloud computing? I don't know, but it feels like even when you listen to earnings calls and stuff, like there's a lot of people who still are like, I don't know. And you're like, dude, what? Like you don't believe in cloud computing, or like that's not like a material thing for you moving forward? And so,
Yeah.
I mean, you know this stuff better than I, but it just seems kind of crazy that there's still people who maybe they don't not believe, but they just are less convinced that should be like a big part of their portfolio.
Yeah, it is interesting. And I think there's like some strategy aspects to this as well, where it's like, all I want to do is compound my money at like 8%, And if
8%? Damn, all right. We're going to have to talk about this crypto stuff when we get done. 8%, Bitcoin goes up and down 8% in a day.
Yeah, well, I'm talking about some of these old school, money managers where it's like,
okay. Yeah.
If I'm at 8%, I'm doing my job, and I only want to take on enough risk. I don't want to take on, any risk. I just want to compound at 8%. And I will do that for the next century, And I think, it's a smart way to play it, right? Because if you just look at compounding and being in the market, I think this is the stuff that we need to start teaching our kids. It's like the basics of, compounding and financial literacy, but those mental models around how you can get that 8% and what that looks like is changing, and Amazon is the prime example of this. How many people missed Amazon because Amazon wasn't generating cash, and Amazon was just piling cash into new just driving it, investing it right back into the business. And that's the same thing with a lot of these cloud software businesses that are running on subscriptions and ARR models, where they're not getting every single piece of cash up front. And I think these businesses they're investing $1 because they're going to get $3, over some time horizon. And so early on, these businesses are like, oh, they're not generating cash or they're not generating earnings. But if you understand how the model works from a subscription, and this like lifetime value of every single customer that you get has a lifetime value assigned to it, and so I will invest $1, if my lifetime value is going to give me $3 over time. And it takes time for that to play out. And I think now that people are starting to see that, these businesses actually can print cash, it was hard to see that early on. And so I think, Berkshire has invested, in some of the high flying companies now. I think Snowflake, they were in, and I think Snowflake trades at the highest multiple like in enterprise software right now. So I think that one's probably like, Warren's probably sweating. He's like, I know he didn't make that decision, somebody on his team did, but it's cool to see them finally starting to understand like how these business models work and how they can print cash over time. The top 5 cloud software businesses are going to do 100 billion in revenue next year. They're going to print 20 billion in cash. And so these businesses can just, once the machine is working and at scale, deliver incredible returns for investors. And I think that's why investors assign, I think the category trades at 20x, revenue. And I think it's because people can anticipate what those revenue streams and that growth will look like into the future with a relative high degree of accuracy. So yeah, investors love those businesses.
And it feels like they're really sticky too, right? Like once somebody starts using the software, I mean, you really got to screw up to get somebody to leave. And so when you start looking at the retention, it's like, whoa, this is not only a great business to begin with, it's also then you got the customer for, years. What better business than that, right?
Absolutely. And it's like a lot of these businesses, it's not just retention where it's like, we kept every single customer. We got 100% retention. A lot of time those contracts will increase, And so then you can say my dollar retention, if this is a $10 contract, this year it's a $130 contract. Now my retention rate is 130%. And when you start modeling that out, where my customer base as a whole is going to be, say it's dollar retention, 120%, 130%, now you're getting a compounding rate on just your existing revenue base, not to mention what you're bringing in net new. And so that, is a compounding factor. Of course, you can discount it, but, once you start getting into modeling what these businesses will look like with that high retention rate, you're not even looking at maybe an annuity stream that it looks like with some, end in sight. Now it's looking like a perpetuity of the way you model it and you discount it. And so there's just so much value to extract from when those business models are working. And the software, to your point, is incredibly sticky. A system like Trace integrates with your accounting system. All the people in the business are using it.
They're not getting rid of you. Once you're in, they're not getting rid of you. But it's not because you like came up with some trick. It's because it actually works.
It provides value. We solve problems. We deliver value. Absolutely.
Like they need to use the software in order to run their business better. Which is like the crazy thing is, how do you build a great business? Just solve people's problems.
Absolutely. Yeah.
Right.
Yeah.
All right. I could talk to you all day. My notes, I didn't use them one time, so I'm going back to no notes. Fuck the notes. 3 questions. 1, what's the most important book you've ever read?
Most important book I ever read. I would say the most important book to me right now is called Survival to Thrival: How to Build an Enterprise Startup. All right. And
Survival to what?
Survival to Thrival.
Thrival.
Yeah, and it's a book that was.
Is that a word?
Survival to Thrival. Yeah. And it was a book written by entrepreneurs who built, cloud software, enterprise software. And it's been awesome for the journey. And we give it to every single employee who starts at Trace because it talks about the early stages of finding product market fit, finding go-to-market fit, and I can say as we've been on this journey with Trace, I felt like I'd be like, okay, we're on page 38. We're going to page 39, and it's really nice to, that people have been like sharing this information. And so for anybody who's out there that's like thinking about starting a business, you can do it. have the courage. There's so much information out there. There's no limiting beliefs. It's like you can go do whatever you want.
Facts. Facts.
And
It's probably the thing that you and I agree on the most out of anything in the world is like there's an entire group of people who literally think the world's like, I don't know, conspiring against them.
Yeah.
And then there's a group of people who are just like, dude, I'm going to go do what I want to do because I can.
Yeah.
Right. And it's like, if I want to be, successful entrepreneur, I can go do that. If I want to learn investing, I can go do that. If I literally want to go be a piano player, like I can go figure out how to do that. But it's this like self-starter mentality, right? Absolutely. And this like, as I'm fond of tweeting, like no one's coming to save you. Yeah. Like it is on you. And I think that that's kind of the way that you guys have built Trace and really just live your life, right?
100%. And if there's one thing that I aspire to do as I, build Trace and have more success is for like kids who grew up in, rough areas or rough neighborhoods, like we did, who they don't know these things, right? And they think that like their world is constrained to this box and it's only this box that they know. There is literally no box. There is literally
you have the internet.
No constraints. Like you can literally go do what you want, and just dream big, aspire big, and just work, work
Facts.
Relentlessly and don't stop.
Sleep schedule. 8 sleep. For those that don't know, I've been asking this question for 8 sleep for a while now. I'm an investor in the company because literally it changed my life.
Nice.
My brother and I have a competition as to who can sell more 8 sleeps. He beat me last month for the first time ever, which is crazy. I think that he conspired with Matteo, the CEO. I know that you're really into health and fitness. Just look at him. He literally works out every day. I can still beat him at basketball, though. Facts. So let's talk about sleep.
I have a question. This is going to be a great question. What's the worst you've been beat in a game of one-on-one basketball?
I don't think I've ever lost. I can't think of a single time I've ever lost a game of basketball. If it happened, I don't remember it.
All right.
Why? Go ahead. Tell your story.
We were playing, so 4:30 a.m. shuttle. We get to Facebook, 5:36, something like that. And I think we decided not to lift that day. All right. We go play basketball, or we're playing one-on-one. I think you beat me the first game. And I think we ended up...
Well, I should have stopped there. That sounds like the lesson of this story, but go ahead.
I think it was like, okay, so then I won like the next 2. I think it was like our 4th game that we're playing. We're playing games to 11, 1s and 2s.
Yep.
And I just got on like the hottest hot streak
I do
of my life.
I'm not going to admit I remember it, but I remember it.
I was banking in threes from the...
Not even from half court. Like I think he was on the other end of the court and he was literally like throwing it underhand. It was just going in. I was like, this is absurd.
I think I made 6 straight shots and it was just like 11-0 game over.
That did happen. I hate to admit it, but that did happen. That's actually the only time I ever remember losing. The other 2 that you said, I don't remember those.
Yeah, it's funny because if like that happened with me and Matt, my brother, he would just like it would just be completely out of his mind. He would not have remembered. He's
like Mike.
That never.
Mike
happened.
isn't even good at basketball. I literally beat Mike every time I play him. All right, sleep schedule. What was it like, and then how has that changed over the pandemic?
I used to be, sleep when I die guy, like let me sleep like 5 hours a night. And especially when I was like, at Zenefits and I was really dialed into just career success and making an impact. And then I think I've always just been big into studying and research, especially like around my body, working out, like what feels good. And I've really come around to the idea of just you need to get more sleep. And so I would love to get 8 hours every night. I'm a big believer in Whoop, and I think the Whoop band, I've been using it for 2 years. Yeah, I wish I was an investor.
What does it tell you that like you actively use? Because I think like Whoop, Apple Watch, like they all tell kind of different metrics. What's the thing like when you wake up and you look at the metrics? Like what's the thing you look at?
So when I wake up, I look at sleep. It's like literally the first thing I do.
Okay. I like how many hours I got.
How many hours of sleep that I got. It gives you a recovery score. So it looks at your heart rate variability. And I think 8 Sleep tracks heart rate variability as well.
I didn't know what this was until like a year ago. And HRV is like the most important thing that all these people tell me they look at.
Yeah. And so, Whoop gives that to you in a score. So then it tells you like, okay, you worked out this hard yesterday. Here's what your sleep recovery was. And so, here's your recovery rate. And you want to be like yellow, green. You don't want to be in the red. And so I look at that. I look at my resting heart rate. And I think
what are you putting up resting heart rate?
I'm like in the high 30s. So
what?
I'm somewhere like around.
Dude, wait, whoa, what?
My resting heart rate is like recently it's been around 38 to 40. Interesting.
Bro, are you alive? 38 to 40 is your resting heart rate? I thought mine was low. I'm at 50.
Yeah. Matt, my brother, he's at 35. which is like,
does his heart not work?
Which is like Lance Armstrong type, resting
Wait,
heart rate.
38 to 40 is your resting heart rate.
Yep.
Dang. Man, I was flexing on people with 50 because my brother's at 53, and I was like, Joe, you're not even that healthy.
You should
38 to 40.
You should get a Whoop.
Yeah, maybe it's the Apple Watch is bad data. All right. That must be what it is. I got to get a Whoop, and then I'll have 38.
Well,
all
it's
right.
fun because
Actually, I'll have 37.
Yeah, me. By that time, I'll be at 35. What I love about it is like you can have a team, and so it's like me, my brother, and my dad's in it, and so like every single day,
look at everybody's.
We can see activity, like how hard you worked out. You can see your recovery, you can see your hours of sleep. And so, yeah, it's great. I also look at like calories burned. And so every single day it's like, okay, how many calories did I burn? How many calories can I assume? And so then you can kind of play around with it, in terms of like, do I want to, gain or do I want to lose a little bit of weight? So it's awesome to have this level of insight,
Yeah. One of the first times I remember going to the gym with you was in San Francisco. I think we went to a Crunch gym. Shout out Crunch. And I think that we went there. I'm pretty sure that we were trying to see who could bench more. But towards like the middle of the workout, I was like, yo, you want to go for a run? I remember you just looked at me and go, I don't run. I remember being like, okay. Been like, damn, all right. And then you were like, the most cardio I do is like go on the stair stepper thing, like the stairs that rotate. And I remember being like, damn, man, he's in a different world.
But you always had that football player strength, like I would be doing workouts and we'd put 225, and like we'd go for 12 or something like that, and then you would probably like start dying down, you'd do like 8 and then we'd keep going up and then we'd be at like 315 or 335 and I'm like done, I'm gassed. And you're just like, I'm like, what? Where did that come from?
Just one or two.
Like, where did that come from?
Yeah, I mean, it's you ain't got. When you got to do it 12 times. Like if your life matters, then you just got to do it once. Just push somebody away, whatever. So, just I'm not into doing it a bunch of times. Just say I could do that one time. My brothers give me a hard time because they're all weaker. Every single one of my brothers is weaker than me. Just put that on the record. But when we go to the gym, they're like, dude, go to the gym and you work out for 25 minutes. I'm like, yeah, I don't got time to be like sitting around playing. They've like got music. They do this, that. I'm just like in and out. And so literally now the joke is like when we go, the second we walk in, they're like, you done already? I'm like, all right, whatever. All right. Third question you could ask me one is aliens. Are you a believer?
I am.
Oh my God! Don't tell me no.
I'm like I'm not informed, but I see enough where I just don't know, And I'm not gonna do the homework to like figure out if there's aliens or not, Do
you think that there's a higher probability or lower probability?
I think that there's probably something out there. There's probably aliens out there, and I think
and it depends on your definition of alien.
Yeah.
Right. It's like there's probably not little green men, but there's probably like life, whatever.
Yeah. If aliens were real and they did come, like we would probably be friends with them.
Yeah, I mean, I tell Plin all the time that like she's like, what would you do if an alien showed up? I'm like, go to the bar and get a beer.
Hey man, aliens!
What's up, man? You want to go back to my country? Sure, I think it's on another planet though. Would you rather go spend a year on the International Space Station, go underneath the water to the depths of the ocean for a year, or go to Mars and not be able to come back? If you had to pick one of the three. This is my new thing to ask people.
I'm picking none of the above. I would like to stay in my condo with my laptop. But
I'm more scared of the ocean than I am of space.
Why do you say that?
I guess like if in either situation, if anything happens, like you're dead.
Yeah.
But like there's just something about like being underwater at the depths of the ocean and being like, yo, I can't get out. Like, I don't know. It just freaks me out. Like space kind of feels like, we're floating out here, chilling.
Yeah. Would you go to space?
If I could come back. But like, I asked my youngest brother, John, the other day, I said, hey, would you go to Mars if you couldn't come back? And he actually had a great response. He goes, well, what's there? Like, am I going to hang out with people? Am I going alone?
Yeah.
Right. So it's kind of like, if you knew that it was like a better, like what if I told you Mars was better than Earth? Then okay, like maybe, right?
Let's go check it out.
Yeah. Well, I'm not going to go first. I do appreciate though that everyone got mad at Elon Musk because he said he was going to create the laws on Mars.
Yeah.
And he was like, they were asking him like, what are the laws going to be? He's like, we'll figure it out when we get there. And they were like, you can't do that. And he was like, okay, well you go and figure it out then. And everyone gets real quiet, right? So it's like we just don't know.
Yeah.
Like I think that's what's so much fun to talk about, right? It's like, how long would it take to get there? You read, they're like, oh, they created oxygen on Mars. Like, wait, what? Like, okay. Then they're like, oh, we found this like ice. Well, that sounds like we got oxygen and water. So like, that sounds like we might really pull this thing off. And it's like in 50 years, are there going to be people on Mars? Like, probably. They just flew a helicopter, right? Like, sure. And it was a little, robotic one, whatever. But like, dude, imagine 20 years ago telling people we're going to fly a helicopter on Mars. They'd be like, you guys are crazy.
Yeah.
So.
I still got some exploring in Miami to do, so I'm good. There's enough city here for me to go explore.
You could ask me one question. What do you have?
Well, I guess first I would say that I think this is awesome. I think the platform that you built is awesome. I think it's awesome to see you on CNBC. As somebody who's known you for a while, like seeing you on CNBC, I'm like, man, that is awesome. Like that is super cool.
It's pretty ridiculous.
Yeah. As a friend, I'm happy for you. I'm proud of you. I think what was interesting to see is like you've been such a believer in this for so long, and to see like when Bitcoin crashed to like 3-4K and like held your conviction and held your belief, and knowing some people who are like maybe not friends but acquaintances like attack you on Twitter, call you a grifter, like all this stuff. Like I don't think people understand like how disciplined you are, how hard you work, and like that like this is not just some like overnight success. It's actually years, decades of like hard work and dedication. And so what would you say to the haters other than buy Bitcoin? What do you want to tell those folks now that we've like 15 to 20x from that law?
I mean, to be honest, like I just kind of feel bad. Like people always ask me like, what's the most fun part about Bitcoin? And like, look, the memes are awesome. The dancing on graves on the internet is hysterical, right? Like I enjoy it just as much as anybody.
No. The best meme is like the Snoop Dogg where you get the hat and you get the cigarette. That's literally the
Thug
best.
Life.
That's literally the Thug Life meme is literally the best meme.
Honestly,
when I saw that, I'm like, all right, Pomp's made it.
I don't remember who made the very first one, but when I saw that, I literally was like, I may put this on like a TV on my on my tombstone when I die, just so you guys all know. No, I think that the part that I enjoy the most about all of this is I got a message the other day. Actually, hold on. I'm going to read this out because I don't want to mess it up. But I get these messages like this probably on a daily basis. If not daily, then I get them for sure weekly. And this one specifically was interesting because, hold on, where is this?
Yeah, I mean, there's just so many people out there who probably just appreciate the dedication to it.
So this is a person who I don't want to show, so I'll just show you.
Yep.
But basically, they've messaged me a lot.
Yep.
And the last time they messaged me was back in March, and they were like joking around, all this stuff. Yesterday at 7:18 a.m., they said, "Today is my first day of my retirement. Thank you, Pomp, for helping me see the light. Best regards." Then they put their name.
Yeah.
And I like get those messages, and I have no clue who this person is. Literally, it's a pseudonymous account. And I have no clue what they did to get to this point. So they could have been 55, 60, 70 years old, right? They put $10,000, it went up, and then all of a sudden now they've got money and they can retire.
Yeah.
Or they could be like literally like a 25-year-old kid and, whatever. But I think like what people forget is there's like, and this day's a little old, there's probably at this point over 100,000 wallets that have more than $1 million of Bitcoin in it.
Wow.
Right? I'm pretty sure that's correct. When you think about what that does to like an entire generation of people, it's crazy.
Yeah.
And then that's just Bitcoin. And then you look at all this other stuff. And so recently, Barry Silbert from Digital Currency Group, he tweeted out and he was like, the amount of wealth creation is like staggering in this industry. That's all great. But who cares about like the money as much as like, imagine being somebody who wanted to retire, couldn't, and then all of a sudden does something that they can retire. So like, that's all the positive stuff that I enjoy. When you flip it around, and you look at like the hater side.
Yeah.
I just always go back to like, I feel bad for them. Like, man, you have such a shitty life that you're literally on the internet talking shit to somebody who you don't know.
Yeah.
Right. And then like the best part always is like, I'll DM them sometimes. And then they're super nice, right? Like immediately they're like, oh, I'm so nice, like whatever. And so it's just like, when you look at it almost like empathetically and you're just like, man, That's really, you woke up this morning and that is what you decided to say on the internet.
Yeah.
Like, are you okay? Right? What you realize is like, one, it's easy because it's like super non-personal, right? So people can attack people, like all this kind of stuff. There's pseudonymity and whatever.
Yep.
But then the second thing is just like, if you meet them in person, they would never say that. And by the way, you would never like say anything back either. And so like, I think like for all the benefits of the internet, there's downsides.
Yep.
And so if you asked me this question 2 years ago, I'd said all kinds of crazy stuff, like really crazy stuff. Now I just kind of look at it and I'm just like, man, like you can participate in this just as much. Yeah. And so I'll tell you one last story before we go. I went to dinner recently. Plano was there with me. I don't want to say who was there, but there was very successful people there. And one of the people was a hedge fund / private equity person. They had no clue any of the Bitcoin, crypto, any of this stuff. And at one point during the dinner, they started to go on and on and on all about the GameStop longs were manipulating the market and screwing the hedge funds. I just sat there, listened for a little bit, and Plano was looking at me like, I know this dude ain't going to sit here and not say anything. And so at some point, I just very cordially was like, yeah, but like, aren't the hedge funds manipulating the market as well with all of their research and, you know, their comments and going on television and like all this stuff and everything?
Yeah.
And to his credit, he was like, oh, that's a good point, right? Like that's fair. But I think that's like what the internet's done, right? Is like the internet didn't necessarily like swing markets or do anything. All it did was it created more accessibility, and then it allowed for everyone else to do the same thing that the hedge funds are doing, right? Or professional investors or whatever. And so to me, like the people who are mad about this, usually, like there was a guy literally today who told me, I tweeted out and I was like, if you're a young person, don't go work at a traditional bank or traditional asset manager. Like all of the innovation and most of the returns moving forward is going to be in crypto. Like go get a job in crypto. Of course, this guy runs like a $4 billion hedge fund, which by the way, if you're on a $4 billion hedge fund and you're talking shit on the internet, like you should be doing way better things or your investors should take their money back. And so he basically was like, look, this is stupid advice. If you get a job offered from like Goldman Sachs or Susquehanna or any of these places, like you should go take it. And I was like, hey man, like you're confusing. Like take Susquehanna, for example. They're not a traditional asset manager. Like they're one of the biggest players in crypto. So like, sure, go work, but go work on their crypto desk. And he was like, trading equities at Susquehanna is better than any job you guys have. And like the response I want to say, frankly, which I didn't, I actually typed it out and deleted it because it wasn't worth my time, was like, dude, we can compare your hedge fund returns to like literally strangers on the internet who just held Bitcoin for the last 5 years because they destroyed you and you're charging 2 and 20 and they literally are better at your job than you are, right? And so like, sure, returns end up like being the scoreboard.
Yep.
But at the end of the day, like all you're seeing is like, it's fear. They're literally scared. So if you're trading public equities, you're doing all this stuff, you have a decision. Either you can adapt or you will die. Like your business will be disrupted because everything is going to move to the open public blockchains. And so when I just think through that, I'm like, all right, so if somebody's being aggressive or like negative, either literally something's probably wrong and like be empathetic, or two, like they're fearful. And like when they're fearful, like, hey man, you see the same thing I do. It's just either you operate out of fear or you operate out of optimism. And like optimism always wins.
Optimism always wins.
Yeah. So like, you know, whatever. Fuck off. I mean, you know, at some point, literally, you just throw your hands up and you're just like, whatever, I'm going to do my own thing.
It's
like,
not worth the time.
Yeah, knock yourselves out.
Gotta
whatever.
live a happy life.
So, by the way, if you're a young person, you go work at trading equities somewhere, then you probably should have an intelligence test because that's probably not the best thing to do. So, all right, man, tracehq.com.
TraceHQ.com.
All right, where can people find you on Twitter?
Mike __ Gonz. Two underscores. Yeah.
All right.
It's tough to get a handle.
Yeah.
Mike Gonzalez is a common name.
Do you want to tell a story real quick?
No, we'll save it for next time.
All right. Thank you so much for doing this.
Thank you for having me. It was fun.